Good morning, everybody. Welcome to the Flow Show, Thursday, the 8th of May. And I'm going to take a look back at what happened last night with Mr. Powell. Not an awful lot, but we've still got some market moves after it. So a bit to discuss today, amongst other things. Morning, Kay. How you doing, mate?
Morning, Ryan. Morning, everybody. Yep, doing all right. Getting ready for our dear friend, Mr. Bailey.
Oh, yes. Well, unfortunately, I'll be missing Mr. Bailey because I've got an appointment I've got to attend to. So, all yours, mate. It's
I'm
all
sure you
yours.
feel gutted for missing Bailey.
Yes, absolutely gutted. Yes, I can't wait to be gutted. Right, let's get cracking. Might be a bit of a shorter show today because, as I say, got to head out pretty sharpish. So we'll get through the headlines pretty quickly and take a look at what's going on. Over at the Bank of Japan, we had their meeting minutes out for the March meeting. Nothing much that we didn't already know. Probably the only thing half worth mentioning was one member said that given that the Fed said it was in no hurry to adjust its policy stance, the BOJ's policy could be a bit more flexible. Make of that what you will. Japan's still working hard to get a deal done with the US. They're apparently looking at bringing in shipbuilding into the tariff talks, according to the Nikkei. So they're really trying to nail down anything that will get them avoiding Trump's tariffs. Over at the RBNZ, Governor Hawkesby said we will likely revise down our projections for global economic activity. Their upcoming meeting is at the end of May 28th. So it looks like a downgrade to forecast, at least for their global picture. No mention of what they'll do for the domestic forecasts, but they're not looking overly bullish for the rest of the world. Coming into what we've had this morning, we've had the Riksbank this morning leaving rates unchanged. Don't need to show it, but there you go. Unchanged at 2.25%. The assessment of the executive board is that it is somewhat more probable that inflation will be lower than it will be higher than in the March forecast. But they're not exactly being clear on anything. They've got as much uncertainty as everyone else. That stance says this could suggest a slight easing of monetary policy going forward, but it's wise to await further information to obtain a clearer picture of the outlook. So they are potentially looking for maybe one more cut, two at most, perhaps at some point, but they're in wait and see mode as everyone else. Riksbank Stadin says the US administration has put a wet blanket over the economy and that he's not at all certain of another rate cut. Says Riksbank's wording in the statement is intentionally vague. It's a bit of a BOC line there that we put it in the statement, but we're not sure how valid it's going to be moving forward. Norges, they held at 4.5% as expected too. Says the rate will most likely be cut in the course of 2025, but that if the policy rate is lowered prematurely, prices may continue to rise rapidly. Another wait and see. Okay, those two indicating their projected path, but they're sitting on their hands for the moment and watching what's going on.
Yeah, exactly. Same as everybody else. Try to make a statement that makes sense. Just for saying we are in a wait and see mode. Both keep their easing bias, as you say. Riksbank being at 2.25% is probably at this stage one that brings it at 2%, where most of people's inflation targets are at. That would make sense. I think Norges Bank may have a little bit more room, but they obviously have to see what their economy is doing with lower oil prices, etc., etc. So they may be perhaps in second half of 2025 a bit more aggressive, but on the tip of my toes, really.
Yeah, we'll wait and see. Who knows? Right, we've got a new finance minister in Germany. His name is Klingbeil, Beal, whatever you want to call it. We'll call him something, Klingbell or Klingon or something later on. We'll have to find a name for him, Kay. but he says he wants this ministry to bring growth impulses, whatever that means. If it's anything like Merz, who wants to raise potential growth, it's going to be a wild old ride from these guys. They did get a bit of good news out the data this morning, though. Industrial production up a decent 3% versus 0.9 expected. Also saw their trade balance improving there, with exports rising 1.1% higher than expected and imports dropping quite significantly as well. So an improvement to theirs. And we are, Case, just, well, for March anyway, just seeing a little bit of life in the old German economy.
Yeah, bottoming out. Is that the term that we could use for the German economy right now?
Can't get any worse.
Or something of the likes. Mate, okay, can't get any worse. Is like the glass half full, and the next accident is just waiting to happen. I mean, bottoming out is at slightly more glass half full. So let's be a little optimistic for once on the German economy. But of course, there is an absolute mountain to climb for them, and I trust the Herr Klingbeil, as I think it should be pronounced, is having his work cut out as well to get Germany financially, fiscally back on the road.
Yeah, and we'll see whether they can do that or not. I'm not going to bet on it, whether they can do or not. But yeah, they've got a long, big deep hole to get themselves out of at the moment. But looks like we may be seeing something. It is only March, 1 month of data where things have just started to pick up a bit, and the PMI's a bit less crappy for April. But we had the same thing last year as well, and that all petered out quick enough. Anyway, a European Commission spokesman has probably given the most truthful line you've ever get out of Europe. They said China continues to be the key enabler of Russia's war in Ukraine. Without China's support, Russia would not be able to wage war in Ukraine to the same extent. So, refreshing to get a nice bit of honesty out of that. We'll leave power for a little bit. We'll just get through the rest of the headlines. Mexican President Sheinbaum says Mexico wants a US MCA review as simple as possible. She says there is a review that's due to take place in 2026 as per the treaty. We're also working to avoid tariffs on tomatoes, which looked a bit of a strange headline, but one of the bright sparks in our chat room pointed out that Mexico is the world's largest exporter of tomatoes. So there you go, Kate. You learn something new every day, mate.
Yeah, absolutely. Now we know where the best tomatoes will come from for our spaghetti sauce. Yeah?
Exactly. Mexico Governor Rodriguez anticipates further rate cuts if inflation stays stable. Their meeting is on the 15th, so indicates that they are potentially going to continue cutting. Trump, he decided to pop up 5 minutes before the FOMC announcement to say that he's not open to pulling back on the 145% tariffs on China. So just as they're getting ready to talk this weekend or start talking about talking, he's continuing to play hardballs that there's not going to be any pulling back on tariffs, and probably until they get some concrete info about what they're going to be talking about. But it's not happening ahead of this meeting. He says he might be easing his chip policy towards Gulf states, and there was also a report that he's going to rescind the global chip curbs to do with AI restrictions. There's a big bum fight going on with that one. And then he announced that there will be a big news conference this morning at 10 a.m. That's US time, about an unnamed country in a big trade deal announcement, which will be the first of many. So a big secret thing, which, as it transpires, looks like it's about the UK. Because a UK official confirmed that Trump is expected to announce a US deal outline. Now that word is, or that sentence is a bit specific, an outline. It's not an actual, doesn't sound like it's going to be an actual deal, but it's going to be the outline of the deal they're working towards. So there could be others as well. We don't know, but we need to see what happens with that later on. And I'll talk about that in the pricing in a little bit. Vice President Vance says we think Russia is asking for too much. Talking about the Ukraine situation, would like Russians, Ukrainians to agree guidelines for talks. He says there's a big gulf between where Ukrainians and Russians are, and it's probably impossible to mediate without at least some direct negotiation between Russia and Ukraine, because neither side actually want to sit down at a table together for now. China Xi has popped over to Russia for a meeting with Putin. Xi said he will resolutely defend the rights and interests of China, Russia, and the vast majority of developing countries. Says they are facing unilateralism, easy for me to say, and bullying. China will work with Russia to safeguard authority and status of the United Nations. So he's put in hints about bum fights with the US, but he's not talking overly strong against the US. So he's sort of trying to have both feet in both barrels at the moment. But he went over to Russia pretty quickly, whereas trying to get a phone call out of him with Trump seems still to be dragging on. But they're being all pally-pally over there for that one. Right, let's go to the Fed. Left rates unchanged as expected, 4.25 to 4.5% range. It says the uncertainty about the economic outlook has increased further. The committee is attentive to the risks to both sides of its dual mandate and judges that the risks of higher employment and higher inflation have risen. Powell was out and about, and as usual, trying to walk all sides of the line, not straying too far in either direction. So tariffs so far are significantly bigger than expected. It's time to wait before adjusting policy, and that they're in no hurry and can be patient on adjusting rates. Said there's cases where it might be appropriate to cut rates and cases where it isn't. Says the risks of high employment and inflation have increased, but it's not yet in the data. Says businesses and households are very broadly concerned and are delaying decisions. And he says this, we would expect this to show up in the data in weeks if all the concerns are not alleviated, which is what we've been saying and what I've been saying, that we've seen all this softer sentiment data, but nothing in the hard data as yet. We're probably on a timeline, maybe 1 to 3 months before we start seeing that showing up, unless all this Trump uncertainty is done with and put to bed. But he also talked about the soft sentiment data as well, but he says it's happened before, and again, it's not showing up in the hard data, and if it did, that's when they might take notice. White House's Hassett says he's displeased that the Fed has bad economic modelling as to what happens with tariffs. Given that no one knows what a tariff level is going to be from one day to the next, I can side with the Fed on that one. But anyway, overall, the Fed, lots of uncertainties, maybe a bit more than they expected. Not going to do anything with policy. They're wait and see mode like everyone else. Kay, your thoughts?
Well, I as I said in our room, sorry, last night, one takeaway for me, apart from the fact that nobody knows what's going to happen, is that it did filter through yesterday that he would be prepared to wait for longer to act if the data doesn't give any clarity soon. So I guess that is what, well, at least that is what I took from the meeting, if there is anything to take at all. And the market reacted in similar way, maybe reducing just a little bit the expected rate cuts now. The way he spoke, if there would not be as much uncertainty, we would be on hold for a long time. And that's where the bond books and people trading all of that is have to manage it again. But risk-wise, it's quite something that that actually it did not affect risk at all. Waiting for longer to bring down rates. U.S. equity markets have been behaving extremely well. So the market sees positives in what the Fed is doing, or is it Trump's announcement on deals, perhaps?
Yeah, very much so. And just looking at these rate expectations, just using the simple CME Fed Watch tool, and this is looking at the June meeting. As you can see, a week ago we were looking more likely to get a rate cut. Now that's gone backwards. The market was pinning, a lot of the market was pinning June as a day when as a date when the Fed might resume rate cuts, but that's been well booted out the window now. Last week we were fully pricing 100 basis points of cuts for the rest of the year. That's much closer to 3 cuts now. If you look forward to December, as you can see there, we're still, pretty much maybe pricing between 3 and 4 cuts, but that has been again a bit of a shift the other way. But as you can see, it can all change on a moment. So we've got 5 meetings left to make 3 or 4 cuts. It's still possible, but it's going to need a change to the tune in what happens with Trump. And the longer the uncertainty goes, the more damage that might be done. Kay, would they cut rates if they see the economy weakening just because the uncertainty is still going? I mean, if Trump said, "Oh, we're going to get trade deals in July," would he cut in that instance, or would he think, well, this still might be a short-term blip, we'll just try and get through it and wait and see the other side?
Yeah, well, there's this thing. I think that they will cut if the economy weakens. Not only expectations, but he clearly said they are going to wait for the hard data, right? I think they will cut if the economy weakens and do QE or increase buybacks in bonds, because between Besant and the Fed, they have now agreed that they are going to be flexible in that buyback scheme. I think they would rather buy bonds to keep inflation expectations, try at least keep inflation expectations in check. It's hard data, and as we've been saying, and people in our room as well, those hard data, and especially if you look at the employment picture, may have to wait until at least August. So before that, they may still just be on a wait and see. But if the hard data start to weaken, I think they will cut, regardless what deals and stuff are going to be done. It would even be worse if the deals are done and then the economy weakens.
Yeah, that'd be a double whammy.
Oh yeah, that won't be good. And then we will see bigger cuts, by the way.
Yeah, exactly. Very much so. The market will get very, very dovish over that, and dollar will be getting a big old massive knock on the head, no doubt, if that happens. So yeah, the Fed's in a bit of a rock and a hard place. It's still got rates higher than it would like, so it wants to get them down. Take out Trump. Is there enough reason to cut rates? Maybe, but not in a rush. Unless the economy does tip over. So lots to play for. We're probably going to be another couple of months before we get any clarity on whether they're getting closer to that or not. Right, that's that from all the headline front, as far as I can see. This Kay, you got anything else?
No, go for it, mate.
Go for it. Well, let's get rid of that. And just before we kick on, just want to make you aware again about the sale going on. We're getting more and more people daily, it seems, taking up this offer. Our latest gentleman in the chat room, Cardiff City supporter, which being a West Ham supporter, we've had many a good days out over there, I can tell you. But he's a welcome addition to our room, or she, I should point out. So yeah, plenty of people taking advantage of this sale. So our community is getting bigger and bigger, and our trade room is getting more active and more active, which is very good to see. So if you're sitting on the fence about it, this offer isn't going to be out for long. So give it a go. You never know. You might think to yourself, "Oh, I've been putting it off," and then you get in the chat room and realise why you didn't do it sooner. So I'm looking at people like you, Ali. If he's about, is Ali about today? Oh no, maybe he's having a day off.
Seen him.
No. Oh, anyway, there's the offer. Have a crack. Right, let's have a look what's going on. So, as Kay mentioned, the market, perhaps a little bit too dovish going in, and now it's doing a bit of an adjustment. And we've always got to gauge that by what the price is doing. We've obviously seen the dollar strengthening a bit since last night in a lot of pairs, some moving more than others. Euro dollar, for all its sins, it's looking bearish today, but we've hit pretty much that level again around that 12.65, 66, 70 level. This will be the third time we've had a go there and held. So it's going to stop people. There's a lot of euro doves or bears out there. People seem to be always far more on the bearish side of the euro than on the bullish side. So this is another one of those moments where people might think, oh, this is it. This is when it's going to roll over. Okay. Thinking is probably one of the biggest account killers for a retail trader. Okay. Don't think, watch. If the price isn't going to roll over, then you want to be careful if you're short. But if we get through this 1260s area, we're probably going to be on for a run down to the figure, because I should imagine there's probably a few stops in there, and it's going to shake the tree a bit if we get out of that. Wider picture still, we're still in this uptrend for the year. That doesn't start to get tested until the low 110s. So even if we break here, there's a lot of work to be done. Okay, but also keep an eye just on the short term. If you're watching this intraday, we're just finding a bit of resistance into the figure now at 113. So if that keeps going, that would potentially indicate we're going to get a break here. But levels are level until it's not. So if you're short, you want to be careful if we can't get through here, and more careful if we can't, or if we get back above 113 and go back in the box. But if we hold below here and you're short from above, this is your sort of decision line at 113. Stay below there, then you've got a chance of seeing it lower. It's pretty similar in a lot of pairs. Aussie dollar, I added a small bit 27s last night, just after the Fed. I thought I might have managed to catch near the lows because we got a decent bounce from there, but that ran out of puff overnight, and here we are down testing the figure. So what I don't want it to see happening, and it looks like it's happening, is we're starting to hold below this 30-40 area, which is not a good sign for longs like me. If we're getting through 63.90, 64, then we're probably going to be heading to this level here, 65, 63, 50, 60 odd. So we've got a couple of levels here that could be a maker or breaker for all this price action here. So this 50s down to 30s. So oh, what's that going on now? Keep an eye on that. So
that's your account, right? Saying like,
yeah,
performance.
More performance. Mayday. Everyone should have one. Right. So yeah, but this is all a dollar move, okay, at the moment. So you can look at each currency as you like, but know that this is a bit of a dollar move going on. Dollar yen as well. We're up testing this 145 zone. Again, it could be an important moment for this. We're in this uptrend. We've been making higher highs, been making higher lows as well. We need to see if this trend is going to continue. Let's put it on a bit wider. If we're going to see this trend continuing, it needs to take out 145 first off and then make a new high above this one. If it doesn't, if we fail here or fail short of that high, then we're probably going to see another pullback. It could start to indicate that this short-term trend is maybe coming to an end because we can't continue it, or it just might mean it's going to take a bit longer to play out before moving higher. But again, keep an eye on the wider picture. We are still in the downtrend. We have had moments like this before where it's crept up, and then got walloped after. So unless we're getting above the 38.2 and heading to the 50, then this trend is still in play. Short term, you know the levels, 145, 146. If we're breaking that one, then we might be off to the races. Kay, I don't know if you kept an eye on yields last night. I was half looking at it. We back in the middle, really. This 420, 450.
Yeah, well, I mean, it into the meeting, slight bit lower on yields, but then after the meeting, since Powell is seemingly ready to wait for as long as it takes, back up, and here we are, but nothing is clear. He himself repeated that at least 15 times over the press conference. What we could say is a slight, but then the slightest flattening, meaning that the short end trying to price out a little more of expected cuts, but for the rest, nothing to write home about on the yields fronts after that meeting. It should not. It should not. And I said the only little thing that came up there was that ready to wait for as long as it takes, really. Because they don't know exactly what is going to happen, and nobody does. So they are at the same point, and for as long as we don't get any clarity on global trade, they will or the employment market, they will stay on a hold, and gradually we may see perhaps a little bit more of flattening of the curve, where the short end catches up a little bit when if more immediate rate cuts at least have to be priced out.
Yeah, absolutely, mate. Right, one thing we need to mention as well is the Bank of England today. Just before we do, just this trade stuff that's going on with the UK-US potential announcement. One thing I've been talking about is how do markets react to trade deals? Does it react to the country involved, i.e. it's positive for that country's currency, or does it fall into the risk trading? Because obviously everything is sort of dollar risk off when he was throwing the tariffs about. But if we're getting deals done, is that going to reverse the dollar weakness? We see some dollar strength. So the quid is a case in point. We're not seeing cable, massively rallying. It's going down the same as every other dollar pair, euro dollar, Aussie dollar, all the rest. So it's not looking like there's much positivity around this trade deal. It's all a bit of a risk move because we've had the Fed easing rate cut expectations by the market. Trump's now talking about lots of deals happening. So there's reasons to be risk positive on the dollar front. But as Kay mentioned in the room, there are some of the pound crosses doing moderately better than some of the others, but it is very, very moderately. Euro sterling is stuck in this. I don't know if the Bank of England can unlock this. We're expecting a cut, 25 pips. I don't think it's going to be an important meeting. The votes may show something, whether it's a tight one or a unanimous one. Usual suspects, Dingra might possibly be going for a 50 vote. She's never going to be too far away from the dovish side. So I don't know what the quid does on this one, really. But Kay, you expecting much?
I'm not expecting much. I'm just seeing that those crosses, as you mentioned, I talked about in the room, they are doing a bit better. It could be that the market is waiting for BOE and perhaps even the announcement to see the outline of the deal to get going again in sterling. What I would say, I mean, cable is going to depend on really on what the dollar wants to do. But I'm relatively positive sterling again on crosses, even if they cut 25, unless, and that is what quite a few economists now expect, unless they review the growth outlook massively lower. But now with that trade deal to be announced. Are they really going to review growth in a big way today? That remains to be the question. But
Yeah.
as you say, right, and
It
uh,
is a monetary policy report meeting, so it is an updated forecast meeting and press
yeah.
conference.
Okay, so we will have to see what they say. People also think that they're going to revise CPI massively lower. Himanshu was asking about euro sterling. It really, we are trapped, Himanshu, and we really need to break out of call it what is it, 30, 40 on the top side, even up to 50, and then 60, 70 to the downside in euro sterling. For as long as we are in there, it's going to be hard to really go for a new trend or at least a prolonged move in the sterling. I personally, I still think that sterling may be doing a little better than the euro, but okay, I think
Yeah.
it is where it is, right?
Yeah. Okay, mate. I'm going to pass it over to you.
Yes, sir.
And boys and girls, I'm going to head out and leave you with K-Man to close the show because I've got an appointment to get to. So have a great day, everybody. I'll see you bright and breezy tomorrow. And thanks very much, mate. All
Yeah,
yours.
safe trip, mate.
So,
Here we go then. Mike, on the Kiwi. So we had this bit of a warning about from the RBNZ on growth, and add that to what happened in the dollar overnight, and you can see that the Kiwi gave up quite a bit of its gains. Some people may be looking at a smallish Hunchback of Notre Dame, head and shoulders, perhaps with a broken through 59, 30, 35. That was a bit of a support. We have a bit of flag channel, windsock, however you want to call it, support also looking fragile right now. But I think for those who were long Kiwi, I think the more important level that we have here is 90 figure, 58, 90 figure. I've been repeatedly saying and calling this level for as long as it's above. I would say it keeps the overall positive bias. But if we would break, then we can't rule out at least a move down to 58.5, and there it will be the next important level to me, where it ideally should hold max 58 and a quarter, but that then should start to hold. If those levels can't hold, then I trust we are trading something different in the dollar as well, as such, not only Kiwi. I think if you look at the Kiwi on his own, it's a bit it's gone back to trading kind of with the Aussie dollar right now. Aussie Kiwi is back a little higher. Not sure whether we need to look for anything specific on the Aussie Kiwi Himanshu right now. I don't have a real interest in it for the time being anyway. But we are seeing globally revival is a big word, but a, a reaction after Powell, after deals potentially being made, a bit of a more positive reaction in all the dollar pairs. Gold is not an exception. We tried to see what was going to happen in this little box here that I had, 30.75, 33.70, 33.85, 90. Didn't hold. We had a quick blip in Asia, but then that very rapidly turned south. Um, the global Asian time zone didn't buy gold, and if I've been saying that so often now, gold is a hedge against everything that can go wrong. Now, for the time being, the market is rather looking at the glass half full, so we have more correction in gold. We stopped held around that 33.20-ish, 33.15. I wouldn't be surprised to see it go if the dollar continues to behave a bit better. Also, equity markets being positive, that is not in this day and age, at least, that is not over positive for gold. So I wouldn't rule out to have a look at what's happening in this area here, over there over there, 32 three quarters up to 32.95. Don't be surprised if we would have a look down there, and then we will see if this new trend line is holding or not. Okay. The long-term picture hasn't changed yet. We need to break different levels for that to change. But in the shorter term, I would not rule out to have a look down here, and then we will see what happens. We may have to wait to see what happens on gold and maybe even silver to know how this first round of discussing about what needs to be discussed with China and the US is going to give us over the weekend. So watch out for the weekend, even if it's not expected to make any decisions, but the tone, and I would say especially the tone that China has during this first round of meetings, especially that we know that Xi is meeting with Putin as well today. They are really great buddies. Is that going to have an impact on that first round of talks? We will see. So we may have to wait for a fresh direction on gold until we get back into the seat on Monday. Okay. Yeah, Mike, Kiwi and both the Aussie are supposed to be risk currencies as well, but it is on that front right now. It's a bit uncertain, and they both will be affected. Although I think, if I'm correct, that New Zealand has less direct relationships with, in percentage wise, has less direct relationship with China than Australia, for instance. They may both be affected. Also, whatever happens over the course of today, tomorrow, they will be affected by what those US-China talks will give. Everything will be really affected by it. And if you look at what could really be affected by it as well, is the stock market. And I'm looking at this zone here, high 57s. If if that starts to break again topside, it should mean that there is a lot of positive going on in those talks potentially. Also positive for trade deals with the US, etc. If this breaks above 57 three quarters, it's going to be positive, I think. But until then, yes, we tackled this 56.5, 56.80. We are actually above right now. S&P is pushing on this morning, but I would really pay close attention to what's happening around 57 three quarters, okay? Because that is going to be a bit of a key area for the S&P right now. What else, guys? If you want me to look at something else, just by the way, on the and dollar CAD is actually ramping higher this morning. I spoke to you about this big support zone on the dollar Canada, and it's been trying a few times, but it is still holding. It goes down to even 137 right now, but I would say 137.1030 is going to be pretty important for what's going to happen on the dollar Canada. So this whole zone that I've been talking for a whole while, it is being tested, being really thoroughly tested, because those are daily. So we spend a lot of days trying to get down here, but for the dollar CAD to really continue its way down, I think we need to break below those trend lines, below those fib levels around here. If not, there is a risk that we are going to start gradually climb higher again. For that to happen, there is a bit of an intraday resistance around 139, 139.10, but I think really it's 139.40.50. 139.40.50, if that breaks to the top side, to me at least, the party may be over for the Canadian dollar for a while, and we could creep up again. So just I wanted to repeat the importance of, in my opinion at least, this whole support zone in the dollar Canada. Yeah, I mean, if you look at it like this, 63 three quarters, 63.90, Mike, is going to be a level, but psychologically, the 64 is going to be a bit of a zone as well. But I would wait for confirmation to say that Aussie is going to return much lower until this trend line breaks, because that one is now a nice 3-point trend line, and that comes in around 63 three quarters, 63.80, Mike. Okay. Just one to keep an eye on. But obviously, you can keep an eye on all the sterling crosses, but this one is behaving quite positively. The other day, we tested that 190.20.25 actually to the pip, and we are moving back up. I bought it again last night. I think personally that nothing too bad is going to come out of the Bank of England. Of course, never say never, but I'm a little, but just smalls, long sterling going into the Bank of England. One of the crosses is this. The other one, Himashu, sorry, but I'm I'm actually a little short euro sterling for as long as we are below like 85, 30, 50 or so. 34 for a starter over the BOE. But this one looks pretty okay. Obviously, the yen is trading sentiments. Equity markets are up. US yields are holding up for now. We don't have clarity yet on the US Japan trade talks, but in the meantime, this is trading sentiment. Sterling is a bit of a sentiment currency as well, and so therefore, when the sentiment improves, a cross like sterling yen is on the move. Okay, I still think, and I've haven't been talking about it for a while now, but I still think that we could if this triangle works out, we could be on our way back to a bit higher levels, call it 194 perhaps. So this is something that I'm looking at as well. Break back below 190.30, 190.20, 15. Party may be over. Okay, it's relatively clear in my view, at least, especially that we had this price action to support it. That's it, folks. I'm quite done with it. For those who watch the Norwegian Krone post Norges Bank, I don't have much to say since we've broken under 10.50 in the dollar Norway. It is still it has kept on the retest. The dollar is behaving better, so there may be a case for it to retest that level at some point. But if there is a dollar between dollar Stocky and dollar Norway, without going over the dollar Stocky in detail, if there is one that is likely to retest slightly higher levels a bit rather than Norway, I would be perhaps looking at the dollar Stocky also. Michael, I'm not a big watcher of DAX and stuff right now, but yes, I've seen this level mentioned in the room as well. DAX has been quite outperforming, right? But for how long does the rebalancing between what we have seen US assets and European assets? I think we may be coming to at least an end for now. So I'm not sure whether DAX is going to continue to outperform the US market. So there may be a little bit of adjusting the balance there. You know, the communicating vases a bit maybe more in favor of the US markets right now, especially if they get deals done, you know, because the European deal, as we know, is probably going to take longer than the rest. They are now trying to get the easier deals done. UK, as we know, has always been more positive towards getting a deal done with the US. They want to get deals done and show Europe that they can do stuff outside of the European Union, and so perhaps therefore European assets may perhaps, and I'm really saying this very cautiously, but may perhaps slow a little bit versus the US assets. And with that, ladies and gentlemen, let's call this a session. What is in there? Okay, that's done. Yeah, calling this a session. Trade safely over the Bank of England. And we will talk again tomorrow. Thanks everybody for being with us every day. Ta-da.